Very good morning, friends. I'm Nalnakshi Swami, coming up with the same strategy, 5-minute strategy. Why I adopted this 5-minute strategy. Actually, when you're trading in the option, most of the traders, they watch the index and trade in the options. When you are trading in the option, you should, if you are an option buyer, time is your friend. That is most important. The price has to increase with the time. Let me write down every sentence. For option buyer, time is your friend. Price has to increase with the time. Bar, price has to decrease with the time. Price has to increase with the time or price has to decrease with the time. That means for the trend, uptrend, price has to increase. For the down trend, price has to decrease with the time. And what I've noticed is we have got only 75 bars. If I take this and drag it to the last bar of the candle, there are 74 bars in our trading time. For in an intraday, you get 74 bars of 5-minute time. So when there are 74 bars, what I've observed is only, you can see here in front of you, price increased with the time in 19 bars, 1 hour, 35 minutes. See, it has to increase like this. That means it has to move in a momentum. Then whatever the option you have bought, whether it is a call option or put option, it will increase. This is the period it will gather momentum and option premium will pick up the momentum velocity and it will accelerate. Later, you can see this is the common thing what I've observed. Here, price traveled through time. You can see from here to here, price has traveled through time, price has not increased exponentially. At this period, people tend to make mistake buying an option or buying put option or call option. But later, you can see later in the last hour, let me bring it to, price has increased. Price has increased. If you capture this, price made a low and it was a slow increase. not like this. See the difference of the candles presentation, wide range bars. Price has moved so swiftly. That means price has traveled like me traveling for India to America. It has traveled through time very fast. That is very important. Here, it is like traveling to America by ship. Slow movement. There, both call writers and put writers, they will have an edge. Their premium will go down. This is not suitable for you. That is why this 5-minute strategy, I made this. See, here, you must understand this. Later, from this area, I'll come back to that. Price has given an opportunity for the people who have missed the trade here. And second entry was available on Nifty yesterday. It continued, the price continued from here to here. Price increased. Why this 5-minute strategy? This is the concept you need to understand. Why did I do this 5-minute strategy? Let me remove this, all the writings over here. Let me take out. You should understand the concept. How to take the trade. I'm considering 5-minute as my base point from where the clock ticks to the upside. Clock will move. Prior time will move. But whether the price will move, price has to move along with the time. So you need to understand the direction of the market instantly. So if I observed, I took many indicators and they failed actually. For example, I'm enabling RSI on the chart. See, when price gapped up from the previous price level, that means it has traveled very fast through time. To this level, you are getting the RSI reading. It will not be very clear actually. It will be distorted. It has to pick up. It has to pick up. It has to adjust. Because it is statistics, not the principle. It has to collect the back data and it has to adjust. Even the moving averages, they have to collect the data and they have to adjust. But the price can tell you instantaneously. If you are able to see the price action properly, it tells you something. Here, you should start reading the candlestick pattern. First candle was a bearish candle. Open gap, though it is a green candle, up to this, it shortened its greenness here. Okay. So from the gap to this, it is positive. You have to visualize like that. Instead of visualizing because human psychology is affected by the red candle. Immediately, they apply this RSI. Because all the retailer traders have been taught that it is overbought. You must understand the limitation of RSI because its scaling is only from 0 to 100. It has got its own limitation of scaling. So it is projecting as it has been calibrated or it has been constructed. So it is plotting overbought condition and you are seeing the candle, red candle, and so many times you might have seen first red candle and follow through it is coming down. That psychology will affect. So immediately you should not act on this. Instead of that, when it gaps up, put a green candle, gaps down, put a red candle. Just put a green candle over here so that it will not affect your psychology. See, what is the next candle it is doing? Second candle itself, you got the trend, right? Green, green, higher, high, higher, high. You are catching the momentum from the bottom itself, from the second candle itself. And if I make in my 5-minute strategy, what I'm doing is I'm marking the high and low. Let me remove all these things so that you will understand properly from the base. Now you start, let me remove all the drawings. If I remove all the drawings, these things will go up. I'll copy and then remove the drawings. Okay. Now, what is the first step in 5-minute? See, you are not bothered whether it is gapping up or gapping down. Just do not have any bias towards the market or anything. Mark the first 5-minute candle, high and low. And from the area, if it is a gap up, just put a green candle over it. Next step, divide the candle into half. 1 minute. I'll go to the template and change it to. So I am dividing the candle into half. You are getting the price levels 22,634, 22,600. When the next candle is green, forget this. And this candle is green. Trend has established over here. When the trend has established in the first 5-minute candle and my 180 degree, that is the middle point, I am considering it as a clock circle because price move through time in a cyclical manner, cycles, circles. So the wheel has started to move in upward direction. And I'm using the Gann square of 9 to know in advance at what all prices the price can act, time. Price can act with the time. It gives you time. See, in the second candle, I'm getting the thing. Then next is my sixth candle. You have entered into the trade. You can anticipate on the sixth candle. Candle count you can use, counter, somebody suggested me. That also can be used. Sixth candle, you are anticipating price can act. Already you can see price has moved like this from here. Actually, this is the 180 degree for me. You have to mark 180 degree when there is a gap. For yesterday, this was the 180 degree. This was the base. 22,568 was the base, not this. But when we are dealing with the present day, we have to be on the present timeline. This is from yesterday, it has gapped up to this. So complete, if you take, this is the first candle, entire first candle, the 50% of the first. I'm not, I hope I'm not confusing you people. Consider this total thing as a first 5-minute candle. Then a clarity comes into your trade. So I'm dividing it into half to know where my candle position is here. 22,588 is my 180 degree. The candle is standing tall. Next candle. This is the first 5-minute candle from here to here. And the next candle, though it is bearish, it is retesting. You have to analyze it like that. And the next candle is a higher. In the second candle itself, you are getting the trade. See, RSI will confuse you. You are not able to judge anything. So I am removing RSI. So I eliminated RSI. I eliminated everything. So you don't act on the candle colors. You are seeing the trend. Trend has been established. By putting the Gann square of 9, it is an amazing thing. When I am getting the second candle itself a trend, it starts from here, 1, 2, next, sixth candle, I can anticipate the reaction. 1, 2, 3, 4, 5, sixth candle, you mark it. What the price is doing? Price is moving along with the time. Along with the time means time is also increasing. Price is also increasing. Okay. Next comes after the 2, next vibration point, it can come around 11. 11th bar. So with the time, price is moving higher. It is up. It is the base. Now next base is formed over here. From this base, price has moved to this base. This is your immediate base. Price has moved higher with this as the base. So 11th bar, at the time of price, 11th bar means around 9:55. The above 9:55, one cycle has been started. Another cycle has been started. And later you can see the price. Let me take, when you compare, it comes to 19 bar. Price is price. What has happened to the price? Price is not increasing like this. When compared to this movement, you are seeing the price is not in correspond. Price is increasing. No, time is increasing. Price is not moving with the time. Why? The reason I have told you with the explanation that price has moved very fast. With the time, price has moved in this, that is by the time of 10:40, that is after an hour. That's why I designed this strategy especially for option buying. I told you for option buying, momentum is needed velocity is needed. It has to move, price has to move very, very fast with the time. When it moves very fast with the time, then only your option premium. You can option buyer, as an option buyer, you can gain with the time. So that's why in this strategy, 5-minute strategy is designed for the early momentum, early price momentum, because in the early hours, if you find the trend direction, capturing the trend direction is very, very important. That's why I'm capturing the trend direction within 5 minutes. Because I need to move fast with the time. That is my intention. No other indicators. They are all statistics. Consider if you apply moving average, even the shortest moving average, 5-period moving average, or your RSI, name it, all are statistic based. That means they have to collect the data and present it to you. They will not be fast. They are lagging because they have to collect the back data and they have to present. But here you are seeing the price with the time, and you are analyzing the trend in the first 5 minutes candle itself, which is the base of the market opens. Because there are 12 candles in 5 minutes candles, there are 12 candles in first hour. That's why I've selected 5 minutes time frame. How many hours are there in our market? That is 74 bars, means more than 6 hours and 10 minutes. See, in this time, first hour there is a movement. From here to here, if you see there, from 10 o'clock to 2 hours market, there is no increment in the price has gone sideways. You have to sit through the hours for waiting for the trade. Of course, you got the trade around this time because the price squared with the time. Time has squared with the price. Here, the price has come to the same price level. Time has come to the same price level at this. This is the Gann principle, squaring of the time. That's why it exactly reacted around this area. So if we bring this and 40th bar, see, it started from 2, 11, 28 and 40. You are getting 40. In the time cycle, if you put a circle over here, the time has come to this place. At this, price has matched with that. There was a vibration and there was a reversal. That is what Gann talks about it. When price matches with the time, that is nothing but squaring of the price, then you can notice reversal changes. So at this price it gave a correction. For the people who missed the entry, momentum entry, they can enter again and ride the trend. So here on this day, price did not come down, deep down. It has matched with this time cycle. The price has increased. This is how I am capturing the 5-minute strategy, by considering 5 minutes as my base and putting a circle around it and I'm watching for the trend establishment. Here, it was very easy for the trend establishment yesterday because the first candle was a green candle. That is a gap. And even though a second candle was red candle, you consider it as a retest, and the second candle itself here, within 10 minutes, you got the reversal. You got the entry, momentum entry. So you are finishing within 12 candles. That means 1 hour. And with the help of this, you are going to see at what candles, when the price has started vibrating from the second candle, next candle is 6. You will try to know what the trend is doing on the sixth candle and whether the price range. See, it has not come inside the price range. The trend is intact. You have entered here. You need not bother. You can trail your stop loss and hold your position. Because in live market, unless you have proper imagination, proper idea about the trend, you cannot hold the position. You are going to react for every red candle and you are landing in trouble and you are going in a different direction. You will start trading in a different direction. That's what happens. This is the 5-minute strategy recap I'm doing. Let me go back for another example, for another trade, so that market will present different things on different days. Okay? Here, you have to see, visualize the thing. Let me bring the Gann, paste it here. This is on the 12th. What was the prevailing trend on the previous day? It was. So here, from here to here, it gapped up, right? Price gapped up, it made a green candle. In this green candle, if you divide this into, I'm making everything simple, into half, bearishness in the second candle itself. This is the first candle, first green candle, that is a gap up. Price opened here and made an high. The entire thing is a green candle. So I'm making this red candle into half. Immediately in the second candle, trend has established. See, I'll placing this green candle adjacent and it is a red candle. Closing below this. It has closed below the 180 degree. Okay. There was a follow through. When there is this type of movement, very swift type of movement, if you would have captured this trade, so you are getting second, next you are getting same type, sixth candle. 1, 2, 3, 4, 5, 6. Vibration. In the sixth candle, you are seeing whether it is crossing this territory. This is your base. Base has been altered over here. It has come down and you can anticipate that it is not going to trend is down. You are getting another entry, second entry here, or otherwise you could have captured this move within first 5-minute candle itself. You need to mark like this. Then only you can trade. The time has ticked down, the trend has continued. See, from the sixth candle, next is the 11. Let me take it and bring it to 11th bar. 11th bar is almost 55 minutes. An hour is over. Your trade, you need to stop this trade because price did not increase. Time is moving. Price is not decreasing. Here, the price has decreased. This is a favorable time for an option buyer. If you would have bought put option that day, you could have made lot of money. See, this is how you need to capture the trend. Sometimes this type of presentation will also be there. Here, from the previous day, this is the previous day boundary, previous day close. This is the first candle, green candle. And immediately there is from here to here, you have to take this. From here to here, it is a green candle. Same thing. If I divide this into half, let me clear the drawing so that you can see properly. Okay. So now what I'm getting the trend is from here to here, it is the green territory. Green territory. Let me divide this into half. First 5-minute candle is a next 5-minute candle. It is a bear candle, right? And the second candle here. So when the bearishness has increased and the green thing is here. From here to here, green thing is here. Sometimes this type of presentation will be there, conflicting presentation. But still, the trend is not down because there is no next candle, red candle forming here. There is no clarity in the trend here. The price struggled here. You can see the pin bars. You have to see the reaction. What are the reaction? Why price is reacting like this? Why in this area pin bars are formed? It may be a red candle in live market, red candle in live market, but closing in. Buying pressure is coming back into these candles. So here you can see on the fourth candle, 1, 2, 3, fourth candle, the trend established. Okay, so trend is not down. You are not going to do. So up to from fourth candle, if I paste this Gann square of 9, I am here. On 8th candle, I need to see what the price is doing. 1, 2, 3, 4, 5, 6, 7, 8. On the 8th candle, there is increment of price with the time. Next is, after the 8th, it goes to 15 candle. 8, 9, 10, 11, 12, 13, 14, 15 candle. Here you can see some sort of disturbance in the price. price moved incrementally over here. All of a sudden, you are presented with a red candle, big red candle, bearish candle. There, next vibration is around 23. So your trade is, morning trade is over. Call option you have bought and your trade is over. You can see in the 23rd candle, with the time, price is coming down. Price is coming down, but see this is the increment over here. Next base. Base has been altered over here by closure of this candle. Then you need to carefully watch that the trend is altered over here when it started moving here in this base. This is the candle. What is the candle? 1, 2, 3, 4, fifth candle. What the price is doing? Here, fifth candle, the low was broken. That means the time as around 11:25, the market trend has started changing over here on this day. You can see price moved along with the time in the downward cycle. This is how you need to make. So I've shown you two examples. I'll repeat again. What you are going to do is just what has happened. That's why we mark the previous day high and previous day low as our boundary and frame. First, you take the first 5-minute candle, have a glance over it immediately. Do not act by this. See, this is how you need to make, and price increased with the time. Nowhere it has come. This base was not altered at all. Second candle, 1, 2, 3, 4, 5, sixth candle, the price came near that and it squared with ninth candle time. And you saw reversal. You should have taken call option. The people who missed the trend here in the first hour, they got the entry. Same call option, we will go and check at this hour, 12 o'clock, what it has done. Let us go to 22,600 call option. See, it started over here. This is the time, ninth candle. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So it increased from, this was the base. It came down to 164. From 164, it rallied up to 231. 164 to 231, it is 70 points. And it decreased with the time. It came down to 180. From 180, it has increased to 279. 279 minus 180, you are getting 99 points. 99 points. But you have got within an hour, if you would have entered around here, that is around 129, you have captured 108 points, not sitting throughout the day. You have finished the trade. You need not sit with this. Let the price do anything. See, sometimes price goes horizontal with no increment. throughout the day. All the 4 hours, after the remaining 4 to 5 hours, it goes sideways. What is the point? As an option buyer, you don't get the trade at all. I hope you have understood the 5 minute strategy. If you cannot make it out, again, I'll come and explain this 5 minute strategy. This is the advantage for the option buyers. This trade, this strategy, I've designed for option buying. If there are any doubts, please do comment. I'll make one more video about this. Thank you very much, friends. Nalnakshi Swami signing off.